Imagine walking into your bank one morning, trying to access your own money, a money you saved, money you earned, money you worked years for, and being told you cannot touch it. No warning, no letter, no phone call, just frozen. Now imagine that the reason this happened was not because you did anything illegal. It was not because you were under investigation for a crime. It was simply because of how much cash you deposited and when. If that sounds frightening to you, it should. Because in 2026, this scenario is becoming a very real possibility for thousands of ordinary Canadians who have no idea the rules around cash have changed dramatically. Stay with me, because what I am about to share with you in the next few minutes could be the most important financial information you hear all year. And if you leave before the end, you might miss the one detail that could protect everything you have worked for. Welcome to Pension Facts Canada, the channel dedicated to giving everyday Canadians the honest, straightforward financial information that the banks and the government are not always rushing to explain to you. If this is your first time here, you are in the right place at exactly the right time. And if you have been with us for a while, you already know that we do not do fear-mongering here. We do facts. Real information. Accurate, verified, and presented in a way that actually makes sense for your life. So let's get into what is really happening with cash in Canada in 2026, because this story is bigger than most people realize. To understand what is happening right now, we need to go back a little bit, because this did not start in 2026. This has been building for years, and most Canadians simply were not paying attention. Canada has some of the most comprehensive anti-money laundering laws in the world, enforced by a federal agency called FINTRAC, the Financial Transactions and Reports Analysis Centre of Canada. FINTRAC has been operating since 2000, and its job is to collect, analyze, and share financial intelligence with law enforcement to combat money laundering, terrorist financing, and other serious financial crimes. And for the past 2 decades, Canadian banks, credit unions, money service businesses, and even casinos have been required by law to report certain cash transactions directly to FINTRAC. Here is the number that every Canadian needs to know. And this is where things get very real, very fast. Any single cash transaction of $10,000 or more must be reported to FINTRAC. Not might be reported. Not could be reported, must be reported. This is called a large cash transaction report, and it is filed automatically by your financial institution every single time you deposit or withdraw $10,000 or more in cash. Without your knowledge, without your consent, and without any requirement to notify you that it is happening. But here is the part that most Canadians do not know, and this is the open loop I want you to hold on to. It is not just transactions of $10,000 or more that can trigger scrutiny. It goes much deeper than that, and the rules tightening in 2026 are making this even more significant. There is a practice that financial institutions are trained to watch for called structuring, or also known as smurfing. Structuring is when someone breaks up large amounts of cash into smaller deposits, specifically to avoid triggering that $10,000 reporting threshold. For example, depositing $9,000 on Monday, then $8,000 on Wednesday, then $7,000 on Friday, all within a short period of time. Even though none of those individual transactions hit the $10,000 mark, the pattern itself is a red flag. And under Canadian law, structuring is illegal, even if the money itself is completely clean and legitimate. Let that land for a moment. You could be depositing your own legitimately earned money in amounts that seem perfectly normal to you and still trigger a financial investigation simply because of the pattern of your deposits. Now let's talk about where $20,000 comes into this picture, because this is the number in today's title and it is not random. $20,000 represents the kind of amount that many ordinary Canadians might legitimately have in cash for completely normal reasons. Maybe you sold a used car privately. Maybe you received an inheritance. Maybe you saved up over several months and are now depositing it. Maybe you run a small cash-based business. In all of these situations, $20,000 in cash is not unusual, not suspicious, and not evidence of any wrongdoing whatsoever. But here is the hard truth. In the current banking environment, how you handle that $20,000 matters enormously. If you walk into your bank and deposit it all at once, It triggers a mandatory FinTrack report. If you split it up into smaller deposits over a few weeks without a clear explanation, you could be flagged for structuring. And if your account shows unusual patterns of large cash activity without a clear documented source, your bank has the legal right, and in some cases the legal obligation, to file what is called a suspicious transaction report, freeze your account, and refer the matter for further investigation. This is not a hypothetical. This is happening to real Canadians right now. And the reason 2026 is such a critical year is because Canada's anti-money laundering framework is undergoing significant regulatory updates. FinTrack's reporting requirements are being expanded and strengthened. Financial institutions are under increased pressure to monitor and report unusual cash activity more aggressively than ever before. And the penalties for banks that fail to comply with these reporting requirements have been raised substantially, which means banks are now incentivized to err on the side of caution, even when that caution affects innocent customers. Here is the pattern interrupt I promised you, because I want to flip this around for a second. The people most at risk from these rules are not criminals. Criminals who are actually laundering money generally know about these thresholds and have sophisticated methods to work around them. The people most affected by these rules are ordinary, honest Canadians who simply do not know what the rules are. The small business owner who deals in cash and deposits weekly. The senior who kept money at home and is now trying to put it in the bank. The family that sold a property privately and received a large cash payment. The person who received a cash gift from a family member abroad. These are the people getting flagged, investigated, and in some cases having their accounts frozen. Not because they did anything wrong, but because they did not know the rules. So what do you actually do if you are dealing with a large amount of cash? Here is the practical guidance that every Canadian needs right now. The single most important thing you can do is document the source of your cash before you ever set foot in the bank. If you sold a car, keep the bill of sale. If you received an inheritance, keep the documentation from the estate. If you have been saving cash at home over time, write a clear account of where it came from and keep any records that support it. When you go to make the deposit, be transparent with your bank. Tell them what the money is and where it came from. You are not obligated to justify your own money, but proactively explaining the source of a large cash deposit goes a very long way in preventing your account from being flagged. Do not split up large deposits just to stay under $10,000. This is the mistake that turns a legal situation into an illegal one almost instantly. If you have $20,000 to deposit, deposit it. Yes, a FinTrack report will be filed. But a report is not an accusation. It is simply a data point. What gets you in trouble is not the report itself, but the appearance that you were trying to avoid one. And finally, if you run a cash-based business, make sure your accounting is meticulous and up to date. Keep daily records of cash received, invoices, and receipts. A well-documented cash flow from a legitimate business is one of the cleanest defenses against any financial inquiry. Now here's something that connects all of this to the bigger picture, and this is where I want you to really pay attention. Canada is moving steadily and deliberately toward a financial system with much greater visibility into how money moves. The combination of expanded FinTrack regulations, increased CRA cross-referencing of financial data, and growing pressure on banks to self-regulate means that cash, which has always operated in a relatively private space, is becoming less and less invisible. This is not necessarily a bad thing when it comes to fighting genuine crime. But it does mean that every Canadian who handles cash needs to operate with a new level of awareness and documentation that simply was not required 10 or 15 years ago. The rules have changed, the enforcement has intensified, and the technology being used to detect unusual patterns is more sophisticated than most people could imagine. The old assumption that cash is private and anonymous is simply no longer accurate in 2026. And here's the final thought I want to leave you with. The one that ties everything together. Financial literacy is not just about investing and saving. It is about understanding the system you are operating inside of, knowing the rules around cash deposits, FinTrack reporting, And account monitoring is not just useful knowledge, it is protective knowledge. It is the difference between having access to your own money and having it frozen while you try to explain yourself to your bank and potentially to law enforcement. That is a situation no honest Canadian should ever have to be in. And it is a situation you can avoid completely simply by knowing what we talked about today. And that right there is the whole reason Pension Facts Canada exists. We are here every single week bringing you the financial information that protects your money, your future, and your peace of mind. The topics we cover are real, the information is accurate, and our commitment to you is that we will never waste your time with content that does not matter. If today's video opened your eyes to something you did not know before, then we did our job. And if you know someone, a parent, a sibling, a friend, a colleague, who handles cash regularly and might not be aware of these rules, please share this video with them right now. That one share could genuinely protect someone from a financial nightmare they never saw coming. If you have not already subscribed to Pension Facts Canada, now is the time. Hit that subscribe button, turn on the bell notification, and make sure you never miss a video because we have critical updates coming on Canadian pension changes, CRA audits, benefit adjustments, and financial rules that every Canadian needs to stay ahead of. And before you go, drop a comment below. Tell me, did you know about FinTrack and the $10,000 reporting rule before today? Have you ever had an experience with a bank flagging a cash deposit? I want to hear your story. I read every single comment and I respond as much as I possibly can. Thank you for watching. This is Pension Facts Canada, and we will see you in the very next one. Stay informed, stay protected, and take care of your financial future, Canada.